In today's video, I wanted to share my reasoning as to why I believe that at current price levels, Cardano and ADA are a better investment than Ethereum and ETH. But before we jump right in, remember that we do a crypto giveaway every month on this channel, and to be automatically entered, all you have to do is subscribe to the channel and follow us on Instagram, which is a very important step as we will be picking winners from Instagram as well, and so following us on that platform doubles your chances of winning. Anyway, without any further introduction, let's get straight down to the analysis. Right now, Ethereum has a market valuation of approximately $140 billion, while Cardano has a market valuation of approximately $12 billion, meaning that the market believes ETH to be worth roughly 11 to 12 times more than ADA in total. And of course, ETH and ADA operate in fairly similar and close niche areas, and so one can make a reasonable comparison between the two. And as I've said before on this channel, I don't buy the market's implicit opinion that ADA is really 11 or 12 times less valuable than ETH. Instead, I think it has something to do with discovery disparity. Recent polls suggest that around half of all crypto investors know about and understand the basic principles and technological capabilities of Ethereum, while just 5% or even less know about and understand Cardano and ADA in a similar way. You see, one huge and fundamental point that I've been talking about for a long time is that being so young, the crypto market is dominated by retail investors. In other words, average people who aren't financial professionals, and as one may expect from this group, they are not as professional or diligent as institutional investors, such as investment or pension funds. And bear this in mind because what tends to happen is that when an industry, or in this case a financial market, is in its early stages, it's dominated by amateur retail investors who are on average more susceptible to psychological biases such as availability misweighting, whereby an investor or group of investors place a premium weighting on larger projects which are well known and a discounted value on projects which are lesser known. And actually this is what, in my opinion, is in large part responsible for the large difference in the market's relative appraisals of ETH and ADA. Now, talking about this tendency is one thing, but it doesn't on its own do anything for the investor. But when we couple that information with the point I'm about to share, you'll begin to see why I think that the market may well be making a huge mistake on ADA in favor of ETH. And what I wanted to share was that as financial markets begin to mature and institutional capital begins to enter the market participants actually become more professional. And of course, on average, professional investors are more aware of the inborn psychological tendencies like availability misweighting or emotional bias, which make them far less susceptible to making mistakes caused by these factors when investing. And one of the implications of this outcome is that the market appraises assets more rationally and more accurately. Back in the 1950s and 60s, the stock market, while it wasn't exactly new, having been around for a long time before this point, was dominated by amateur investors, and so like the crypto market today, the stock market of the 1950s and 60s placed a huge premium weighting on well-discovered companies, while meanwhile there were lesser-known regional businesses which were selling at prices which were lower than the amount of cash that the companies had in their bank accounts. And so what happened was that as the big money and institutional investors came into the market, the incorrect and misweighted appraisals were in most cases diminished, meaning that those assets which were undervalued relative to their better-known competitors were eventually brought up to a price which reflected a fair value. Now today, in my opinion, the crypto market is going through the same maturing phase as the stock market did in the 50s and 60s. You see, as opposed to just 5 years ago or even sooner, we're beginning to see some mainstream interest in crypto, especially from the financial sector. Investment funds are beginning to treat crypto as an asset class as opposed to some kind of science fair project like they used to. I still remember being told that Bitcoin was a joke at $100 and that it was a bubble at 1,000, and funnily enough, I haven't heard from any of those people since. And as the old saying goes, it's better to be late than never. Anyway, ADA is in my view an undervalued asset relative to ETH. And as mentioned before, I believe that the substantial difference in market valuation is in large part accounted for by a general lack of rationality in the crypto market, as a byproduct of its infancy and the fact that most market participants are amateur retail investors, and very few are aware of the psychological tendencies that investors must try to avoid interfering with their decision making. But of course, all of that is changing, and in my opinion at least, ADA will be a beneficiary of this movement as more rational market participants, namely professionals, enter the market, thus correcting the current undervalued appraisal. Anyway, that's all for this video. If you enjoyed and would like to see more content like this, then consider subscribing. Thanks for watching.